Brooksley Born was the chair of the Commodities Future Trading Commission, CFTC, which regulates many financial derivatives. And she said there's a grave danger out there in the form of these credit default swaps. And credit default swaps are an exotic financial derivative, or moderately exotic financial derivative, were sold on a bright, shining lie that they were supposed to make markets more efficient. In fact, they allow utterly insane gambles, and they're really great devices for accounting fraud as well. She actually says, I'm thinking of adopting this regulation. The Clinton administration goes berserk, and in particular Larry Summers, but also Rubin.
Now behind Larry Summers, there's another layer. Bob Rubin of Goldman Sachs, the Clinton administration, and Citibank. And he also thought that derivatives were a wonderful thing for the U.S. economy, and he made sure that they were never regulated. Also, we can't forget Alan Greenspan over at the Federal Reserve. Now, you look at Summers, he is sitting in the White House today, making policy for Obama. Summers tells Obama what to do. Summers tells Geithner what to do. He's also got some of his hatchet people in the administration. Mary Shapiro runs the Securities and Exchange Commission. She refuses to ban naked short selling and other market manipulations. You've also got another guy called Gensler over at the Commodity Futures Trading Commission today. He is an acolyte and a supporter of the derivatives bubble.
We made the new CFTC chair a guy who had helped to kill Brooksley Born's reform initiatives. And we just did this under the Obama administration.
This was a pre-registered, pre-organized, predetermined event. Anybody who knows that if you allow the banks to become unregulated financial institutes with tsunami-like, weapons of mass destruction-like financial instruments like derivatives, to allow that to run up to levels that are 50, 100, 200 times the gross domestic product with no value. They know that they are taking the profits on going up, but they also know that the end result is the destruction and gutting of this economy.
The scam is simple. The insiders buy hard assets and political influence as the fiat bubbles expand. And then, at a time of their choosing, they purposefully implode the bubble.
You've got a very small group of people, and the Federal Reserve and the global central banking system and the Bank of International Settlements in Switzerland, who are purposefully managing the boom and bust, credit supply, credit contraction, money supply growth, money supply contraction, to create artificial roller coasters and artificial volatility that they can trade around without taking any risk. It doesn't cost them any money. And if they do make a mistake because they're, as George Bush said, oh, the bankers on Wall Street are drunk.
It is uncertain. There's no question about it. Wall Street got drunk. That's one reason I should turn off the TV cameras.
Let's say they walk in one day and they push the wrong button and they lose the bank $1 billion or $5 billion or $100 billion. They can appeal to the government to bail them out. Totally asymmetric relationship between bankers and the rest of the economy. If they make a mistake, they get bailed out. If everyone else makes a mistake, they get put in jail, called a terrorist, and we never hear from them again.
But it's a more sophisticated form of slavery. And we're going through it today. We see that taxation is going up all the time with the supposed crash of the banks that was not a happening out of the blue. It was set up for this time. They could have kept it going for another few years if it suited them, and then crashed all the bubbles. But now is the time. As they say in their own writings, now is the time.
One of the great benefits of an economic model from an economist standpoint is you can basically get whatever results you want. You can manipulate the inputs to make that happen. And that makes it a very easy tool to use to hoodwink other people.
These manufactured, these engineered financial catastrophes are the result of a central banking system that has the ability to add and subtract credit, add and subtract dollars and money at will to create this roller coaster effect. Because unlike most people, the the banks are able to make profits as easily on the way down as they can on the way up in any given situation. Volatility is great for banks and professionals. Volatility is not great for the most average people.
Their operatives in government and media then hold the economy hostage by issuing the ultimatum: give us unlimited bailout money or the economy dies.
What's being used is what I call, to try to get the money, is what I call the suicide threat, where, you know, if anybody has ever seen the movie Blazing Saddle, the sheriff is surrounded by hostile town folks. He takes out his gun, points it at his head and says, you know, don't move or I'll shoot. Well, that's what the big banks are saying. You know, give us unlimited cash or we'll die. And if we die, you'll die, because we're too big to fail.
It is a false flag attack, because Hank Paulson will get up in front of Congress and say, we need $700 billion because that thing, that existential threat, the market is attacking us, and we need this handout to fight Mr. Market. Mr. Market is out there. We need to fight Mr. Market. It's an existential threat. Meanwhile, he is Mr. Market. He's the one causing the problems.
We had Paulson, a representative of Goldman Sachs who happened to be running the U.S. Treasury, came forward with a hysterical briefing for the Congress saying, we, the Wall Street bankers, demand $700 billion in bailouts.
So they say, yes, we'll give you all the money you need. Well, you know, these are arsonists. Paulson, Tim Geithner, Bernanke, they're arsonists. They're asking for more matches. And the Congress is saying, who do we make the check out to? Who do we send these matches to? Who do we send the matches to? Is a ton of matches enough? Can we send you some gasoline to go with those matches? They're like, yes, please.
Don't change our management. Don't pay us what assets are worth. Pay us way more than what our assets are really worth. Don't make us use honest accounting. Allow us to lie. We've just, under congressional pressure, changed the accounting rules for the express purpose of making sure that the big banks don't have to report honest losses.
The only way they can pass this bill is by creating and sustaining a panic atmosphere. That atmosphere is not justified. Many of us were told in private conversations that if we voted against this bill on Monday, that the sky would fall, the market would drop 2,000 or 3,000 points the first day, another couple thousand the second day, and a few members were even told that there would be martial law in America if we voted no. That's what I call fear-mongering.
We have, people in the government threatening martial law or things to get their way in the executive branch against Congress. If you put all these signs together, it doesn't look good at all. That, to the extent we are a democracy, we're sort of a hairbreadth away from a police state.
Congress aided the bankers in carrying out the biggest heist in history with the so-called banker bailout of 2008.
The bailout money, the $13 trillion or so dollars that have been given to the banks, is sitting on the balance sheet of the banks, and that is incurring interest costs. And that's going to precipitate the need to flush the system with more cash. And at some point, the dam will break, and you're going to have very high inflation. Some predict hyperinflation.
You cannot print phantom money out of thin air, backed by nothing, and producing practically nothing without destroying the world economy.
So unless we cut out the toxic funds, the toxic elements of this economy, every time we put in money on this bailout, it's just feeding the fire. It's not making things better.
What should have happened is that those banks and investment banks should have been seized. They should have been seized by the Federal Deposit Insurance Corporation. Those are zombie banks. The Chase Manhattan, J.P. Morgan Chase, Bank of America, Citibank, Wells Fargo, Wachovia, so on down the line, to AIG in the insurance realm. These are zombie institutions, insolvent, bankrupt. The only thing to do with them is to seize them, put them through Chapter 11 bankruptcy. That'll probably turn into Chapter 7 bankruptcy, liquidation. And above all, triage the derivatives on their books. There's no way to bail out a $1.5 quadrillion black hole of derivatives. But nevertheless, they tried.
They will, of course, try to regain some of this money back, but their debts, unlike any other period in history, are now a quantum size bigger than the entire global GDP by a factor of 50 to 100. It's almost infinite amount of